Back. It's time now to see what's big in small to mid caps in Hong Kong. Joining me now with his top picks is Lachlan Christie, the Managing Director of Typhoon 8 Research. Good to have you on and happy Friday. Now, first off, can you tell us, though, if you have any interest in the stocks we're about to talk about?
No, certainly not. Typhoon 8 as independent equity analysts have no interest or receive any compensation from the companies that we cover.
All right, let's take a look at your first pick then. Giordano, it's one of Hong Kong's leading clothing retailers. It's not had as much success lately, though, with mediocre earnings. What is your outlook on the stock?
Well, the results for Giordano are due out next week, and you're quite right, the performance is expected to be not that significant. We should see a 5% growth in earnings only, and that'll be pushed down significantly by a drop in margins as a result of reduced sales in Hong Kong and Korea in the first half. But really there should be a strong rebound in the second half, and Giordano is one of the fundamental companies that has all the right characteristics from a financial perspective. It has strong cash flow, it has a good clean balance sheet, and it's actually trading at a PER at its historic low of 12 times. So we should see a good rebound in the stock in the second half, and that's why we're suggesting investors to step into it at the moment ahead of its results.
Of Forbes Incorporated. For more on the Fed and the impact of Hong Kong stocks, we're talking now to Lachlan Christie, Managing Director at equities firm Typhoon 8 Research, and he joins us now live from our Hong Kong studios. Lachlan, thank you so much for joining us.
Pleasure.
All right, earlier we had Dominique Riffaco of Barclays Capital saying that the House believes that we won't see a shift to a neutral stance from an easing bias when the Fed meets tomorrow. Would you agree with that?
Actually, our position is that we think the Fed will be moving to a neutral bias, but either way, really, it's unlikely to have any material impact on the Hong Kong market. Obviously, there are indicators that are creating the debate about what the Fed will do, and those indicators reflecting what's happening in the US economy. However, the liquidity conditions here in Hong Kong will remain, that is, very loose liquidity will remain for at least 3 more months, and there should be no impact on the Hong Kong market, regardless of whether they shift their stance today or in the next meeting.
Lachlan, let's take a look at some earnings reports coming out of Hong Kong today. Let's start off with Sunday Communications. What are you expecting from the numbers? The consensus estimates are that we're going to see net losses of 160 million Hong Kong dollars.
Yeah, that's where our expectations are too, in line with consensus. The net losses will continue. The thing to watch, though, of course, will be average revenue per user. We should see that move up, we expect, to about $250. The other things that investors will be watching is whether there's been any growth in the subscriber base and whether the company has been able to keep a cap on its churn rate. But overall, the stock is trading at a 25% premium to its comparable smartphone, and we can't see any more value to come out of that stock, really. And in fact, we believe that premium is just a reflection of an acquisition premium ahead of what is an inevitable consolidation in the sector.
Lachlan, quickly before we let you go, how about Sinoland? You like the stock? They're out today as well.
Yeah, we do like the stock. We expect results, in fact, to be flat, mainly because of ambivalent property development profits. But in fact, the stock is trading at about a 40% discount to, at 40% of its net asset value, and this is a stock which is set to recover, and so far as residential property market should recover, its development margins should turn around very soon as cheaper land stock comes online. So we are favourable, very much so, of Sinoland, despite mediocre results expected today.
Lachlan Christie, Managing Director with Typhoon 8 Research. Thank you so much for joining us live.
Good morning at Hong Kong-based Typhoon 8 Research, and the brains behind the stock market information website are trying to calm clients.
This is so far almost entirely a reaction to what's happened in America. The reason it's hitting us so hard is because so many indices and so many markets in Asia have actually been trying to copy and make themselves linked to NASDAQ rather than old economy stocks like the Dow.
To start with, the market has fallen about as expected. The US market was down 5 or 6%. We're down 5 or 6%.
Only Taiwan shares stood up Monday, closing more than 1% higher. But Taipei had already followed the U.S. in its Saturday trading session, falling 5.4%. The million-dollar question in Asia is what happens next. Analysts say the answer lies on Wall Street. In the meantime,
we're actually advising people to avoid all technology-related stocks probably for the next 3 months.